The president is tweeting right now. He just said this. Harley-Davidson has struggled with tariffs with the EU, currently paying 31%. They've had to move production overseas to try and offset some of the tariffs that they've been hit with, which will rise to 66% in June of 2021. He's tweeting at me because we just did the story. So unfair to the U.S., we will reciprocate. And the president has been very clear in terms of using tariffs as leverage to change the dynamic, not just in the trade situation, but change the dynamic with China as well. Has that been an issue in the earnings period so far?
Oh, no doubt. And you said to me the biggest risk coming into 2019 for tech was China. And now, when you look at what's happening on trade and some of the tea leaves, especially for FANG names, especially for Apple, you look at semi names, that's been an overhang now. It's started to get removed from those names. And that's why you're starting to see some of those stocks getting re-rated higher. Obviously, we need to see the details as these tariffs, as well as the trade details come out. But it comes down to IP protection. That's the key focus for investors.
We should be clear. The European tariffs on Harley-Davidson motorcycles were in retaliation to U.S. actions on steel and aluminum imports. So that was retaliatory. That wasn't a first move. That was a response. So again, maybe we call a truce on the tariffs, and that would help Harley-Davidson here and prevent them from moving production overseas.
And they already have moved production overseas.
Well, that's why they did.
I mean, in Milwaukee, Wisconsin, this factory closed down with 4,000 jobs.
One thing I thought that was interesting out of the Jamie Dimon interview last week was that Jamie Dimon said the economy, there's no law that says the economy can't keep growing and doing well for the next several years. He sees no signs of recession. The one thing that could change things is a trade situation or if the deal with China doesn't go through. But Nate, make no mistake, I mean, the president has used these tariffs and he's gotten the Chinese to the table. He's gotten this $11 billion or something in terms of the Treasury coffer. So I don't know that I know he says he's a tariff man, but I don't know that he's necessarily wanting tariffs in place all over the place for an unlimited amount of time. He's using it as leverage, and it's working.
But he's told you asked him about the negotiations with Europe on automobile tariffs. We have a 21%
he likes
chicken
the chicken tax.
He likes on light trucks. Yeah. It's been in place since the Lyndon Baines Johnson administration, and it's called the chicken tax because we got into a fight over poultry exports out of the United States into Europe. So it's been in place. He likes it. And so he said essentially to you the last time you interviewed him, right, no on zero tariffs.
He did say that, and I'm not expecting that to go away. That's significant money. And I do expect, and he said this, that he's going to look at Europe after China. He says the Europeans are worse to the U.S. than the Chinese are. We don't know if there's going to be another big fight with Europe after he gets a deal done with China. We'll see. I think Wall Street's a little nervous about that.
Well, they're nervous about getting the new USMCA ratified as well. That's becoming more. You're starting to see more and more stories about it, more and more discussion about it. Ultimately, falls on the shoulders of Nancy Pelosi and the Democrats in the House to move first with this, but they've got to get that.
But
ratified.
I'll repeat what Darrell Issa said on Sunday. It's peril for the Democrats if they don't ratify USMCA. It's a loss of at least 100,000 jobs just from the USMCA deal. So it's on them. Either you want to ratify this and get moving, because the president said if not USMCA, then it's pre-NAFTA. He's not going to go back to NAFTA.
And you have to take him on his word with that, quite frankly.
Yeah, and that's when you look at when you look at stocks, if you look at trade and you look at the next sort of steps here, that's the one variable that I think investors are trying to get their grasp around. I think we start to get some of these deals. You're going to see new highs, especially in tech, especially with semis and Apple and some other names where that continues to be.
Well, tariffs. So tariffs. The whole problem with this is that it impacts margins, and that's what investors want to know right now. Are margins going to contract or are they not? We're seeing top line sales come in very strongly for a lot of these companies, and that was the question mark. You need the top line to get the margins to at least stay at these high levels that they're at. But operating expenses are increasing, especially at these tech companies. So what do you expect to see? Amazon last quarter said we're going to increase our expenses. How's that going to impact the tech sphere?
Well, that's right. Look, right now it's a Goldilocks scenario for tech earnings. And I think it all comes down to margins because you're seeing more and more investments, what the effect is going to be on the bottom line, especially with social media on security. They're continuing to ramp up investments. You see that in Facebook front and center. But right now, that's going to be the focus as we go through this white knuckle period with some of these names.
Really quickly, I want these Democratic candidates more and more as they campaign for the nomination to get asked about what they would do with all these tariffs that are on the books.
Yeah, and I'm asking all Democrats Democrats that come on, are you going to vote for USMCA? A number of them have said not in its current form. I don't think it's because there's anything wrong with it, but they just don't want the president to have another victory. Daniel Ives, good to see you. Thank you so much, sir.